Hey now, happy Friday, everyone. Hope you had a good week. Obviously, crazy stuff here from the market. So the market continues to be super freaking resilient, and I really hope next 2 to 3 weeks really pay attention. I think the market is giving us a really good pitch here, and I do think there's going to be some pretty awesome opportunities. So I'll do my best to keep you posted and give you a sense of what I'm focused on. But generally speaking, I think the next 30 days is going to be some really good opportunities. So let's make sure we take advantage of it before we get jumping into the weekly recap. For those of you interested in day trading, that's not really my area of expertise. However, my younger brother Chandler, who is also in the Simpler Options room, he's a day trader. So he's going to be doing a webinar this Wednesday talking a little bit about his strategy and his approach to day trading options. So definitely make sure you check that out. I'll put the link in the description of this video. But for the market here, so I think, and I'll be the first to admit, could be wrong, and when I'm wrong, I'll be the first to admit it. But I think here, we got some potential 2 to 3 to 4 weeks of really solid upside. Reason being, it starts with the weekly charts. Beautiful weekly squeeze here for the S&P 500, which is already fired. So you're 3 weeks into the weekly squeeze firing for the SPY. And then on the Qs, this looks awesome as well, a really bullish structure to it, but it hasn't even fired yet. So the SPY's off to the races. You got the weekly squeeze gearing up here for the Qs. And then you got leading names like Amazon, like Nvidia, etc., setting up with some awesome weekly squeezes as well. So big picture thinking, once a weekly squeeze fires, you can get 4 to 5 to 6 plus weeks of momentum. So generally speaking, that's what I'm looking for. And then we take a look at the daily charts, and you're holding up here really nicely at the 8 EMA. So as a swing trader, you got two potential buy zones, the 8 EMA or the 21 EMA. Now typically, once we make that 2 to 3 plus ATR move to the upside, you do tend to get the pull back to the 21. With the the structure of this market and the weekly squeezes behind us, we could still get it. What I think is a little bit more likely is that you get a little flush here this week. You held up at the 8 EMA, and I think we go higher from here. So using the 8 EMA is a potential buy zone. You got the SPY setting up there. You got the Qs setting up at the 8 EMA. Google looks so good here. There's Google at the 8. Here is Amazon at the 8. So weekly squeezes behind us, and we're setting up here the potential buy zone. So the thing to pay attention to now is at that potential buy zone, the 8-period moving average, can you get a lower time frame squeeze setting up? And can you use that lower time frame squeeze to potentially gauge not only a good entry, but the next directional move? So a couple of examples. We'll start with Amazon. Beautiful weekly squeeze. Good looking daily chart. Daily squeeze fires. You pulled back to the buy zone. And now on top of the buy zone, beautiful looking 4-hour squeeze. Stacked moving averages. Got the green 10x bars. Little bit of bearish momentum. But these are the things that we're looking for. Is the lower time frame squeezes on top of the buy zone. Those can lead to really powerful moves. So Google's a good example of that as well, where you got a beautiful 4-hour squeeze right on top of the daily 21 with a weekly squeeze in the Qs. So if that weekly squeeze gets to fire in here, Google, Microsoft, Apple, Facebook, Amazon, all the tech stocks should be thriving. Admittedly, though, which kind of sucks, the only difficulty here, and the reason I'm not jumping into Google, is earnings is in a couple of days. So with any luck, and personally I think a little bit unlikely, but with any luck, if we still have the 4-hour squeeze here after earnings, then I'm looking to take advantage of it. I just wish earnings was a couple of the weeks away, but a little bit too close. So that's what I'm focusing on right now. 30, 40-day thinking. I'm thinking we're moving higher. The weekly squeezes, they're pointing towards the potential of a move like that. My focus is going to be mainly here on Amazon. So a lot of questions this week about Amazon. Stay tuned for the Sunday video. We'll really get into the details here. But for the reasons we just mentioned, beautiful weekly squeeze. The daily squeeze is already fired. You've pulled back to your buy zone. And now on top of the buy zone, you got some really nice squeezes setting up. So I think with the weekly squeeze, and it's not just the weekly squeeze on Amazon. The most important thing to keep in mind, is think of the recent move. The easiest move as of late for Amazon took place a couple of weeks ago. And it was that daily squeeze firing to the upside. As nice as that daily squeeze was, the most important detail here, it takes you a while to kind of, make these realizations. That Amazon trade worked so well, that daily squeeze, because the market was giving you the same pitch. You had the S&P 500 in a daily squeeze, which ultimately fired along, and you had the same thing for the Qs there. So often you're going to get your best swing trade and get the strongest move when you find the good The audio cut off on me there, but you're going to get the best moves as a swing trader when you find that good looking setup in the stock, but at the same time, mama market is setting up for a nice move as well. So, the Amazons, the Nvidias, the Googles, etc., awesome swings as of late, pretty much because you had the SPY and the Q setting up in a squeeze. So we fast forward, and now the markets themselves, same time you got Amazon giving you the pitch, same time as you got Google, the markets are at the buy zone, the 8 EMA, and under the surface, you get a beautiful 4-hour squeeze setting up. So I think moving forward, definitely got the potential for some upside, and I think you look for lower time frame squeezes at those buy zones. 8 EMA, 21 EMA, either or. I think if you can get a lower time frame squeeze setting up on that mean, you can get yourself a pretty good entry. So that's what we'll be focusing on. So let's see. This week, I did end up taking off APPS here for a loss. So lost about maybe $3,000 there. So, I'm going to take that pitch 10 times out of 10. Beautiful structure, daily squeeze, stacked moving averages. You had positive histogram. Every trade's not going to work in your favor, but if you focus on high probability setups with that kind of structure, you take 100 trades like that, at the end of the 100 trades, you're coming out on top. So that one came against us, took the loss there. And earlier in the week, it was kind of looking like things were going to cool down here a bit. We hit the 2 to 3 plus ATR extension. We start drifting under the 8 EMA. You got signs of exhaustion. In any normal market, not the psycho strong market we're in here, any other market though, typically sets you up for a nice flush to the 21. So to hedge the long positions, we did sell a call credit spread on the NDX, but this resilient market quickly bouncing back on us. So we had short strikes at 14,100. We ended up buying that back for a pretty modest profit. So I think it was 20% or so max profit, maybe a little bit better, but you don't want to fight the strength here. So we didn't get the flush to the 21, but we're taking some small profits. So don't be bullish, don't be bearish, be flexible. And on the same kind of thought process here, maybe the market is, getting some exhaustion. We're getting ready to take a bit of a chill pill. We sold a couple of iron condors on the SPX and the SPY. But man, after this move yesterday, and then to reclaim, the strength here and get back above the 8 today, it's just a strong-ass market. So taking small profits on a couple of those condors, and the focus is going to be directional here. So, any other time, this is the perfect time to sell the iron condor. You got exhaustion, you already made a big move. Usually sets you up for the pitch to the 21. But while that still could happen, I don't want to be in that boat. So you got to make adjustments quickly. You got to be flexible. So got rid of the condors. And now that leaves us here with a major focus on Amazon. So I'll break down the Amazon trade. It's getting a couple of questions this week. I'll break that down in Sunday's video. But this will be interesting. Essentially what I've done here is I placed a bet that 30 days from now, Amazon's going to be above 3,500. That's what I'm looking for. And if Amazon 30 or so days from now can be above 3,500, let's see, here's 3,500. So below the previous all-time highs. Into expiration, if Amazon's above 3,500, it'll be the biggest trade of my career so far. If this goes to crap, though, I've structured the trade in a fashion where I can handle the risk that's on the table. So if it goes to crap and it's a max loss, I'll be able to live with that. If it works in my favor, nice trade. So shall be interesting, but we'll talk more about that in the Sunday video. So I'm thinking the market's going to be going higher here next 3 to 4 weeks. Let's see how things unfold. But I appreciate you watching. Definitely tune in to Chandler's webinar, and then I'll catch you in Sunday's video. Enjoy your night.